Okay, good morning, everyone, and welcome to this morning's edition of the Coffee Microcaps Morning Meeting. You're all very welcome to our event this morning. My name is Mark Tobin. I'm the founder of Coffee Microcaps for anybody who is joining us for the first time. And for anybody who is a regular, welcome back to our event this morning. I would quickly like to mention RAS Research as a Service, who are our sponsors for all our online events here at Coffee Microcaps. If you are looking for some institutional grade research on some of the small and microcap names around the ASX that are probably not covered by the sell side brokers, please do check out their website. Quick compliance and disclaimer slide, and welcome to anybody from ASIC who's joining us this morning or going to be watching us later on YouTube. For anybody who is joining us for the first time, the companies we generally have presenting on here kind of every second Thursday is capped under 300 million. That's our definition of a microcap here, in revenue and approaching cash flow break even, or indeed are already profitable. We tend not to have companies from the resources and biotech sectors on here. The revenue and profitability criteria tends to knock most of those out. So what I like to call industrial microcaps, which spans pretty much all of the other sectors from professional services to technology, healthcare, financial services, and indeed hardcore industrial companies themselves. For anybody who's joining us for the first time, we normally, as I say, have 2 to 4 companies presenting on here. Companies present for have a 30-minute slot, which we break down into a 20-minute presentation and 10 minutes of Q&A. If you do have any questions for our presenters this morning, please type them in the Q&A box rather than the chat function. It just makes it easier for me to moderate the questions to our presenters. And please note the webinar is being recorded and will be on the Coffee Microcaps YouTube channel tomorrow morning. You can follow us pretty much on all the socials, Twitter, YouTube, as I said, for the recording of this event and indeed all our other webinars. We've done well over 100 of these now in the last 3-4 years. So there's upwards of probably 200 individual company presentations on there. LinkedIn, and I do write a free monthly newsletter that is available on the Substack platform, and indeed the December one went out yesterday, I think it was. First up, I'd like to welcome back Danny Maher from Firstwave Cloud Technology is coming in to give us an update, and then we will follow Danny's presentation, welcoming back HiTech Group, who are also coming back in to give us an update on how they're traveling. So I am going to stop sharing my screen, and Danny, if you want to share your presentation, I'll let you know once I can see it coming through.
There you go.
Yeah. Yeah, I can see the cover slide of the deck now, Danny. You can take it away whenever you're ready.
Okay, thanks, Mark, and pleasure to be back. Haven't been here for quite a while. Good morning, everyone. So I'll just take you through a bit of the Firstwave story and a bit of an update of where we're up to, and then I'll welcome any questions, because it's quite a transformed and company with a new outlook. So Firstwave, we're a technology company, specifically a software company. We've got significant IP. It's highly scalable software, so it works at the upper ends of the markets. And we develop and market this software for cybersecurity, IT audit, and network management. We do have 2 leading open source products. They're called NMIS and Open Audit. Both of these open source projects were founded in the late 90s and have large followings. They're used by over 150,000 organizations in 178 countries. And indeed, like if you're in US markets, the markets understand open source quite well, and the amount of data that's there and the massive user base there is highly valued. And we look forward to building our revenues out a little bit further and sort of monetizing that with US investors, because on the ASX we don't think that that's valued very much as well, but it's a highly valuable asset that we have. We've got a global reach. Our major markets are USA, Latin America, and Australia. We've got particular relationships in Mexico, which are very interesting to us, which I might touch on more later. Our major products are NMIS, together with its associated commercial modules. That's called Network Management Information System, actually, and it's network management, compliance, and automation software. Open Audit is the world's leading IT audit and compliance software. It's said to be one of the most popular pieces of business software in the world. We have Cybersecision, which is a cloud-based cybersecurity platform delivered through service providers, and we have STM, which is secure traffic management software. And we have major channel partners, and they're service providers globally. So they're telcos and managed service providers who run our software and deliver it to their clients. Just a little bit about our board and team. So we've got John Grant as non-executive chair. So many of you know John. He was CEO of Data3 for quite a while, and he was the inaugural chair of the Australian Rugby League Commission. Myself, I'm a major shareholder in Firstwave, so I know a lot of shareholders like to see founder-led businesses. Certainly, I own 15% of the company. I'm an experienced CEO and commercializer of tech. I came across with the acquisition of Opmantec, actually. That was part of the deal that I would come in as CEO. Daniel Friel, I'll talk a little bit about more later. Great to have Daniel on the board. He joined recently. I will mention a bit later, so I'll leave that there. And Ian Bartram, our CFO and company secretary, has been invaluable to the company, and he's a strategic type of CEO with lots of international experience in high-growth tech businesses. And so a few highlights. We've been going through a large transformation of this business since the acquisition of Opmantec nearly 3 years ago. It'll be 3 years ago in January. So there's been multiple years that we're going through this transformation. Our cash usage has significantly reduced, and in fact, last quarter we were cash flow positive, which for this company is almost unbelievable. So we're really thrilled with that. It's a very tightly held stock. We've got globally competitive products which have high value to tier one blue chip clients. And we operate in high growth sectors. Network management, cybersecurity are both high growth sectors. And I'm brushing through these because I will touch on them more. And we've got an extensive pipeline of new opportunities which will underpin our long-term growth as well as the growth within our existing accounts. So just as an example, I just pulled out a few logos to show the types of customers that we have. Sort of grab one in Australia, Services Australia, Government Department. Most of the other logos, you'll know many of them. So John Deere. Claro are the dominant telcos throughout South and Central America. We have energy companies. We have Macquarie Telecom here. NASA uses our software. Microsoft uses our software. Telstra is a major partner with our Cybersecurity software. And Telmex in Mexico is a very interesting organization for us. So we do a lot with them, and we look to expand our relationship with them. Indeed, Telmex and the American Mobile Group, owned by the Slim family, dominate telecommunications throughout Latin America, and that we have very strong relationships, and they absolutely love our technology. So we're looking to further monetize those relationships. Some of the things we've done recently, we have had board renewals. So we had 2 board members depart, and we appointed Daniel Friel as a non-executive director. So Daniel's based in the USA. He's an industry leader in the US, and he's exceptionally well connected. He founded the Bank of America's Technology Investments Fund, which identified and invested in early stage tech companies. And they invested in around 40 companies and saw multiple billion-dollar exits. He loves working with early stage companies, and we're thrilled to have him working with us and on the board. We have diversified product platforms now and reached through the acquisitions that we've made, both of Opmantec and SciSay. So when we think of Firstwave as history, we really need to be looking at it with new eyes. And there's been a significant turnaround in operational efficiency. Okay, so we're burning $12.5 million in cash in FY20 to $3.9 million last financial year, and we're actually cash flow positive last quarter, and I expect to be cash flow positive this quarter as well. If not, we'll be close. We recently renewed and expanded contracts with key clients, Telstra, NASA, Microsoft, Telmex. This morning we got an extension of a key agreement with Claro, Dominican Republic, and a verbal on a couple of other nice deals. So it was a nice morning for me to wake up to. And we've developed a sovereign ISM compliant email platform in partnership with Telstra and Cisco, which we expect to be monetizing in the future as well. Just very simply, how we look at the business. This is all we try to do. We try to have the entire business with a sales-led culture. So what does that mean? So it means, like, if you're in development, for example, if you're going to develop something, is it going to bring us new clients? If not, is it going to enable us to sell what we have, sell something new to our existing clients, or sell what we have at a higher price, or is it going to reduce churn? If it doesn't do one of those things, then we don't do it. So sales-led culture everywhere, grow the revenues faster, and capital efficiency has been a big focus and great achievement for us over the last couple of years. So just a few quick summary points. We do have industry-leading software. It's both cloud-based and on-premise, but it's all subscription. Our major channels are service providers, particularly telcos and MSPs. As I mentioned, they run our software and they deliver the software to their clients, but we also do work directly with the clients. So they're a natural channel for us, but we also do have clients directly. So service providers pay a base fee to us, and then they pay a fee based on the usage. So as their client base grows, our revenues grow as well. And the bulk of our revenue is recurring, over 80%. I just wanted to touch on the evolution of network management a little, because it's kind of strategically core to what we're doing, and the traditional core to Augmented was the cybersecurity security. To Firstwave was the cybersecurity security platform. So years ago, we had mainframes, so let's forget that, and you had the software to manage it. Then we moved to client server type things, and we saw organizations create standards. So you would have a Dell laptop and an IBM PC or server, and you'd have Cisco Core and 3Com at the edge, whatever it was. But they would have standardized operating environments so they could manage it. And you have products like HP OpenView software. And for the big networks, you used products like BMC, okay? But it's standard environments. Fast forward to today. People are attaching all sorts of things to their networks. They use a lot of cloud-based technologies, but they still got to manage those services and make sure they're available. So they've got these hybrid environments with all sorts of stuff to attach to it. And large networks are being run by supermarkets and manufacturers that never used to have large networks. It used to be banks and organizations like that, banks and telcos. Now, many organizations have large networks, and they don't have expertise to run out these types of products. And this is our niche. We can manage anything at any scale. That's why we're at NASA, because we can manage space missions. We can manage whatever you want. And sometimes we say, if you invent something today, we can manage it today. And there's a really long tail to this, where the core of our technology was open source back in the 90s. So we support over 10,000 vendors. That's a very hard thing for any other vendor competitor to attempt to do. You really have to run back in time and deploy this software like we have in a lot of organizations as open source software, so that device support can be added. So we do feel we're in a very unique position. Our current capital structure, we are a very tightly held stock. Over 80%, approaching 90%, is with 6 key groups, which is Morgan's, myself, the shareholders that came across with the acquisition of Augmented, that came across with myself, Perennial, Roger Allen, and Bell Potter. So it's a very tightly held stock. It is difficult to get exposure to cybersecurity and network management investments on the ASX. And we do operate globally in these lucrative and growing markets. And we look forward to really tapping into the US investment markets as we grow our revenues. And just a little bit of Q1. I went through a few highlights, and I think the main thing is the cash. So Q1 was a cash flow slightly positive quarter for us, which was just fantastic. And it comes after the foundations we've laid to get there, because it reflects the benefits of the operational savings and synergies that we've implemented, not just in FY24, in fact, but before that. The receipt of Microsoft renewals with an uplift, and Australian government contract uplifts, multiple new small client wins. Our average monthly cash burn now over a 12-month period without any new sales is around 250K a month. And that includes some interest payments on a convertible note that we had. It was previously over $1 million a month. So that's quite remarkable. So So the level of sales that we now need each quarter to be cash flow positive is significantly different to what it has been historically. You know, in simple maths, we need 250 grand a month of new sales, new things to invoice on average in the year to be cash flow positive. And when we're selling, most of what we sell is recurring revenues. That obviously puts us on a nice little trajectory moving forward. So we're thrilled to be in the capital efficient um, operating in a capital efficient manner that we are. Ironically, while we've been reducing our cash usage as per that growth, the stock price has been going the other way. So, you know, at some point that's got to reverse. We did have some end of year tax loss selling, particularly with one large shareholder, and we've seen the stock price bounce back significantly from then. But we do feel that we're operating and looking at a very different company with very different capital efficiency and very different prospects to what we have historically. So in terms of our outlook, the business will continue to benefit from these transformations we've made over the last 18 months. We do have a really strong pipeline of opportunities, especially in Latin America, in Mexico, also the USA and here in Australia and New Zealand. And we continue to see increasing opportunities for sales to our existing clients and partners as well. You know, and that's something that we're trying to tap into. You know, in the US, 6 of the top 10 suppliers to government, for example, buy our software. You know, so and that's why we have organizations like the US Air Force and Army and the National Weather Service, etc., even NASA as clients. So we look to tap into those further. Thrilled to have a cash flow positive, basically neutral, slightly positive result in Q1. That was a significant milestone for the company, and you know, I look forward and hope to deliver the same this quarter. So with that, Mark, I'll hand back to you to facilitate some questions, and happy to take any type of question.
Thanks, Danny. In terms of, yeah, I guess the biggest opportunity set that's in front of you now, is it on the network management side or the cybersecurity side, or is it more a particular geography, you know, like what maybe you know, your new US director can bring in terms of contacts in the US/Mexico market, maybe just hone down a bit on like what the key opportunity you see is in the next, if we look out 12-24 months.
Yeah, thanks, Mark. Well, so I'll split that into two. So on the cybersecurity side, the major opportunity is this ISM compliant email security platform, which we're operating with Telstra and looking to operate with other partners as well. So basically, that provides a sovereign government, Australian government compliant email security solution, and it's cloud based, so they don't have to install anything or build it. They can just pay for it, and they're immediately compliant with these standards. So we see that as a big opportunity. But the biggest opportunities for the company do rest with the network management software, and in particular in Mexico with our partner Telmex. We've got several large clients with them on the hook, but there's also the opportunity for us, which we're currently investigating, to launch that network management software as a cloud service. And we want to do that with a partner, and we'd love to do it with them, but if not them, we might do it directly or with another partner. Then we'll be taking on companies such as Logic Monitor and Orvic and organizations like that. Our software is all cloud-based. It is run by service providers who offer it to the market. And since Opmantec was acquired by Firstwave, which is a cloud services company, we want to launch it as a cloud service, and that will be transformational for us from a technology perspective. It will make our technology easier to consume and easier to pilot for our clients, as well as increasing our revenues, because the revenues for the cloud-based version of the software is much higher than the revenues for the on-premise based version of the software. This last week we put up on the website, and you'll probably see a press release come out. We just released a technology called Message Bus technology. That's the technology which will underpin the cloud services for this software, and that's the technology that we're also going to go and sell to all our existing service providers. And it basically allows you to have our software really large scale, multiple implementations. Telmex has 250 servers running our software. When you put this in, they all talk to each other, and you can look at one view from all 250 with everything live. It's really cool. So that's the big opportunities for us, both commercially and from a tech perspective.
Okay. And in terms of rollout, you say some customers you deal direct with, some maybe the majority you work through partners. How do you decide, are we going to do this customer direct versus this one partner, or is that just a kind of legacy of relationships that has evolved over time? Maybe just how that's set up, because normally you see we do everything through partners, or we kind of do everything directly.
Yeah, yeah, good, good question, and good to illustrate that. So looking at the network management business, we see those service providers as our customer actually, but they are a natural partner. So what they're doing is they're running our software, and they're combining it with other services that they then package up and sell to their clients. But that's all they do. So, and that's what a great partner. So if you look at the area of Telmex we're dealing with, for example, it's their customer network operations center. So that's all they do. They don't do anything else. So every time they sign a new client, they need our software, because that client's equipment gets added to our systems, and it's our software that manages it for them. So that's what these managed service providers do. So we actually see them as our customer. So we sell the software to them, and they operate their business with our software, and they make their money off it by selling services to their clients, which rely on our software. But that means that every time they add a client, the client goes onto our system and our revenues increase. So that makes them a natural channel for us. But we never go and sell to their end customers. Occasionally they'll come back to us with questions. This customer wants this. Can we adapt the software to do that? Which we always do, well, almost always. But yeah, it's great because from that perspective, they're a natural partner, but we actually don't have to go out and sell with them because it's embedded in their own service. So it's really cool. On the Cybersecurity side, the major partner there is Telstra, and then we got around 10 other partners running on running off our cloud service. But that particular product is very suited to organizations that have other cybersecurity services or are selling email, or selling email because it protects email, and we don't do that. So very much it's very important in our case to have that business driven by partners who are in the business of selling email licenses and have other cybersecurity services to wrap around it.
Okay. In term, you're talking about the open source business, and I'm just trying to get a sense, is the plan there to, spin that out as a separate listing in the US, or is it, more we can, sell that business, to somebody in the US market because they're very familiar with the value and a lot of the end customers and relationships, which we can then take that money and kind of reinvest into the network management and cybersecurity business?
Yeah, I mean, at the moment we've got Cybersecurity, NMIS, Open Audit, and STM. So a divestment of one of those assets is a possibility to allow us greater focus and also inject some cash into the business. We do get proactive approaches, in particular for the Open Audit project, but also for MIS. But we do get proactive approaches from the US, from PE firms and VCs in particular, but also other commercial organizations that look to acquire those open source projects because of their user base. We don't monetize that user base that well right now. So definitely something we're looking at. No, we're not looking at spinning it out right now. but we do have a project internally looking in particular at the open audit project. I mean, every 6 minutes, a new organization is implementing that software somewhere in the world. I mean, that is just crazy. It is so popular, it's unbelievable. You have organizations like Comparatech, without any contact or lobbying from us, naming it as the world's #1 agentless IT audit software last year and number two this year. So it's a very visible product, and we do want to look at how to monetize that better. Um, um, but no, right now we want to monetize it better, grow our revenues. Then we'll look at what we do. We haven't made any concrete decisions, but we certainly think there's opportunity for involvement from US investors at a minimum, if not divestment.
And then you mentioned, the board renewal process and Daniel coming on board. Is his role going to be, to have somebody on the ground there in the US, doing a bit of business development, working with, somebody, I guess, who's on a closer time zone to, the Telmex crew? Maybe just expand more, because it sounds like he's going to be doing more than just being your standard Ned, if I can say that.
Yeah, and it'd be near impossible to stop him from trying to help. He just loves being involved in the businesses at this stage, just that early stage high growth. Um, he's very well connected, obviously with his position in Bank of America, founding their Tech Investments Fund. He's a economist by background. So he joined the Bank of America as an economist, and then being a bit of a tech guy, they put him in charge of finding new technologies that the bank could use, and then he ended up founding the bank's investment fund, and lots of businesses, like shopping.com, etc., that they invested in and sold for billions of dollars. Um, so it's such a joy to have him on board. He's a very well connected guy. He's a smart guy. He's a pragmatic guy, and he's just got loads of energy. So yeah, he's already reaching out to his contacts in MSPs and the banking world. Like there's a couple of key contracts. It's just, for example, like a large client that we got in the pipe in the US. You get to the ball call, you go, Daniel, do you know anyone there? And he's like, yeah, I know. Well, I know the chair. And it's just. Um, we feel very fortunate to have him there, and he's definitely looking to leverage his networks, and he's getting involved in some of our sales meetings, giving us some mentoring and assistance, and opening doors for us. So that'll be something which takes a while to have an impact. But yeah, he's absolutely working hard for us, and you hit the nail on the head. He's definitely working a lot more than you'd expect from a non-executive director. Yeah.
Okay, great. I just wanted to touch base on the cash burn, because as you say, it has come down, quite dramatically from the graphs that you had in your presentation. I mean, what is driving that? Is that, using AI to, that's allowed you to like reduce headcount, or is it, offshoring work to, lower cost jurisdictions, or is it just in the last 3 years you've kind of really focused down in a lot of other projects that, while were interesting, you've kind of had to prioritize and say, no, we're focused on X, Y, and Z, and the costs associated with those have kind of dissipated, over time as they've been wound down or sold off, or
Yeah. So there's probably two main things. So firstly is the acquisitions that we've made, obviously leverage central resources like your corporate resources. You don't have to duplicate. So there's efficiencies there. Um, but we scaled back on a lot of resources we didn't need, which was difficult. And definitely kind of reimagined the business and made it more efficient. So definitely reduction in human resources, but it's about efficiency and reimagining and re-looking at the business. And one of the things was there were some things that just weren't working and that we were burning money on. In particular, we're running platforms with Cybercision, which might be generating $500 a month, and we're costing us hundreds of thousands of dollars a year to operate. So just closing those down and consolidating the customers onto a single platform. those types of things. And we have exited some bad business. So if you look at last quarter, you'll see a reduction in ARR. The major reduction in that was revenue at zero margin. So we're having to manage this and do this, and we're not making anything out of it. So it affects our gross margins poorly. And yeah, so just cleaning up some bad business, which has been difficult to do because it's been a bit painful because you're signing new business and then you're kind of getting rid of this one because you're losing money on it, so your revenues look a bit flat. But that's all been significant to the cleanup. And I think I said in the quarterly shareholder update, I feel like we've arrived at the starting line. So we've got the business in good shape. We're capital efficient. We've got the opportunities there in the pipeline, and I really feel it's our time.
Okay. Danny, we might leave it there. Thanks very much for coming back in and giving us an update. I was trying to think there when you were talking. Yeah, I think it was March 23 when
Quite a
you
while ago.
presented
Yeah.
at our live event in Sydney. I think was the last time we actually touched base with you. So a lot has
Yeah.
gone on since then. So it was good to hear the story firsthand again.
Yep. Okay. Thank you, Mark, and thanks for what you do. Enjoy the shows. Cheers.
Thanks, Danny. And yeah, if you could just stop sharing your screen. And I do know we have our next presenter lined up here. Elias, if you want to start sharing your screen. Morning, how are you?
Thank you. I'll just share this presentation that I have.
Yeah, I'll let you know once I can see it coming up now. Yes, it's just loading now. Yeah, I can see the cover slide now. You can take it away whenever you're ready.
I'll just try and do full screen.
Yeah.
Excellent. Well, good morning, everyone. Thank you for listening, and Mark, thanks for organising. We'll give you a bit of a rundown on what HiTech does and who we are. So we are a leading sovereign company, and we specialise in talent services, and we provide our services to the Australian government, predominantly to the federal government, but we also do state government departments and some private sector work. We have a very good reputation for providing high quality talent and services on demand. We naturally make sure that these are the best of breed when it comes to this highly sensitive work that's been done for government departments. And over the years, we've acquired membership into the Defence Industry Security Program. So we're a DISP member, have been for some years now. And this allows us to accredit or to sponsor IT or professionals in general to a security clearance level up to the highest level available in Australia. We have a history that goes back about 30 years. So our inception was in 1993. We listed in the year 2000. So we've been ASX listed for many years now. Most of our people that we have are highly specialized technologists, but we tend to focus a lot on the cloud infrastructure applications and cybersecurity space. That's where we see most of our work being done. We're headquartered in Sydney. As I said, we listed on the ASX in 2000, and our current market cap is around the 82 million mark. Some of the highlights that I can present to you of FY 2024 are that our gross margin grew by something close to 17%, 16.5%. There was an EBITDA growth of close to 17% as well. And that was on the back of capitalizing a renewed demand for ICT professionals, especially around the digital transformation and digital work that was being done in government. Some of our highlights of the operation, we managed to become a member of the new ICT PA panel, which is a very lucrative panel to be on. So we were accredited as a new panel member there, which gives us a wide-ranging access to many defence contracts that we previously would not have had access to. And of course, this is another panel that many other federal government departments can piggyback off, and they can access our services via that. So it's not just ICT personnel, but it's also services. We have been a member of the Digital Marketplace panel for many, many years, since about 2016. But they did go out to tender again, and they've called it DMP2. We have been successful in attaining membership yet again. We were always one of the leading providers on that panel, in the top 3, top 5 out of a range of providers, well over 3,000 providers. So we're always in that top 5 category. We're now on that panel again for several years, and we are also accredited under the professional services side of that panel. We are working diligently to try and increase our market share within the defence space, and that's a very lucrative space that we think we can add very strong value to, especially with the kind of people that we can deploy there and our DIS membership. We are working also to ensure that organisations like the NDIA, who have a large budget for the kind of services that we provide, talk to us, work with us, and engage with us for long periods of time, and we've been successful in that regard. One of the key differentiators that we talk about at HiTech is that, we're not all that interested in top line. We really just want profitability to be strong. And that falls well in line with how our performance has been for the last decade or so. So we're very strong. We have a strong focus on the bottom line. And one of the ways that we make sure that we achieve that is this relentless focus on cost management. So when we see that the market is changing and we're in touch with it because we're on the coalface every day, we take the appropriate action to manage those costs. And given we are very strongly aligned to government, then one of the things that we do is we make sure we get a good understanding of where their spend is going to be, and we adjust our costs accordingly, and which is what we did in FY24. Our financial highlights for the year were that we had revenue of approximately $64 million, which is down on the previous year, and that was in line with government cuts, government reduced spending. So we knew that was coming, or we had a good feeling that that was coming. We had our expense profile well and truly aligned with that. We were able to cut the costs that were required to continue to make our bottom line very strong. GP for that period was 12.8 million, and that was an increase of 16.5% year on year. EBITDA was very pleasingly close to 9 million, 8.9 million, which is about a 14% growth, 16% growth year on year, but it was a 14%. It represented about a 40% margin, which is quite high in our industry. NPAT was just over $6 million, again, about 11% year on year growth, and EPS was 14 cents per share. So with a strong balance sheet, and at the time we had about $12 million, that cash level changes over time, depending on what month, what year, what period we're going through. And of course, we've maintained our strong dividend flows. So our full year, fully franked dividend set at 10 cents per share. The investment highlight, I guess, for anyone looking to invest in HiTech is that we are a leading provider of ICT talent services. We do have some now have made some progress in the IT services space, not just talent. And our track record is probably unmatched with regards to growth. And when you see over the last 4 years, for example, that we've delivered all of this growth of close to 20% organically, it really is an industry-leading position. Our clients are somewhat well established. We've been dealing with them for probably 20 years now, and they include Department of Home Affairs, Defence, Cybersecurity Centre, which is part of the Australian Signals Directorate, ASD, Services Australia, Department of Health, Department of Employment, Workplace Relations, and many others. But these are organizations that we have developed very long-term relationships with, and they know us very well. We are on the best panels, or the critical panels that you need to be to supply government. They include the people panel, and we're on phase 1 and phase 2, so we can do permanent as well as labour hire staff. By ICT, which is all the IT talent requests, and now ICTPA, which is the defence government one. Quite a strong position to be in on all those panels. And by no means are we utilising them fully. There's so much work to be done there. We're really only just scratching the surface there. Our database allows us to, place and secure the best technologists in the country. It's sitting at well over 400,000 candidates. We have many, many candidates that are security cleared. And as I said, we're DISP members, so we can sponsor many candidates right up to the top secret positive vetting level. HiBase is something we've developed over many years. It's a bit of software that we use to really run all of our operations within the account management and talent services space. If you had to replace it, it would cost many millions. But we've developed over many years. It's a very proprietary software that we have utilized. It again is one of those things that we have that differentiates us. No one else has got it, and it has been developed specifically for our purposes, and nobody else really has access to it. The board is unmatched. 3 directors who have been with the organisation either from day one or a very long time, and the founders hold about 70% of the shares on issue. The industry tailwinds are looking very, very positive. Everywhere that we look, everything that we talk about, whether it's government, private, and in general, the IT workforce space, it's looking like it's set for some strong growth. So we're well positioned in that regard. Our historical financial performance is, as I said, quite strong. It's probably unmatched in the market. I don't really know of any organisation that has this kind of profile. And you could see it's very strong profiles so far, and whilst that's only 4 years, 10 years have looked exactly the same. So we're hoping that this will continue. The revenue profile, look, we have a nice spread of customers across the top 20. So we're not really governed by 1 or 2 key clients, and that moves around a little. We have been able to get a little more work out of state government, and that has been not because it was accidental. We have a lot of opportunity in state government. We just choose not to do a lot there. We prefer to do the federal side because we feel that it's more lucrative. However, there is substantial opportunity on the state government side. So we are working hard to try and do more of that. And certainly most of our business at the moment remains in the ACT, which is where the federal government departments mainly reside. This is a snapshot of some of our clients that I may have mentioned earlier. So we're working hard to make sure we've got a nice spread. And obviously, as we push further into defence, we'd like to see a large portion of their budgets been allocated towards us. There's a big, strong push at the moment for SMEs to do work across the Commonwealth, and a push against the Big Four. So this works exactly in our favour. We're now just trying to get that message through to government to give us some trust, and having a brand like HiTech, established for 30 years, listed for over 20 years, and proven ourselves as a top 3 supplier by ICT, gives us that very strong standing to continue to do that work with the government. And we hope that defence will soon turn into a very large client for us. Look, these are the panels again. This also shows the state government panels that we're on, which we really don't do much on. And there's a huge opportunity there for us to do that. But again, defence is probably the place we want to be. And the people panel, just so you're aware, it's a whole of government panel. And that's quite a lucrative one. We could do permanent placements there, which we haven't really done much of in recent years. So again, another pipeline for us that we can pursue. And we will hope to retain our top 5, top 3 position on the digital marketplace. The kind of services that we really want to focus on and drive are the cybersecurity services, the different platforms that we can offer technologists for, and of course, the data and digital specialization that we have. This all stems back to the kind of repository that we have, the people that we have that can do the kind of work, and quite important work, of course, for our sovereign capabilities, especially when it comes to defense. When you're sitting there in the defense digital group and you want to implement these kind of practices across defense so that the broader military defense is capable of managing all these kind of risks that they face every day. It's a very different world to what it was a decade ago when it comes to warfare. And so these kinds of services have become critical, and we're well positioned to be there to supply these kinds of services. Hybase, and as I said, our unique proprietary software is giving us that sustainable advantage. We've had AI built into it for many, many years. That's nothing new for us. But we are utilizing it more from an AI perspective. It gives us efficiencies. It allows our extensive candidate database to be monetized, which hasn't been monetized to any large in any large way yet, but slowly we'll get there. And whilst we're very much focused on the public sector, there is enormous opportunity for us to go back into the corporate or private sector, which is something we did some time ago. And we still have agreements with private client organizations that we're looking to reinvigorate. And we're hoping that they'll feel compelled to utilize our services. We are moving and trying to move into the project delivery space via our PDAS, best of breed resource on demand service. It's a hyper service which allows organizations to demand from us short-term at call on an needs basis. So when we get established with some of that, we will be ready to supply it at the back end. And that's probably part of our potential acquisition pathways, that we can combine that service as part of an acquisition and ensure that we can, at the back end, deliver the technologies required to do that. Look, any survey you look at, any kind of studies that are out there show that there's going to be enormous growth in the IT sector, especially in the workforce. There will be it's sitting at about 1 million people now that are employed in the IT space, and expected to grow by an additional 300,000 people over the next few years. So this is quite encouraging, and I think it's no surprise, though, that this is required. There's a shortage of good quality technologists out there. And as I said, we are in the prime position to take advantage of that. And hopefully that will translate into some very strong growth for us. So our strategy moving forward, we've achieved all of our results organically. We've never made an acquisition. So look, I'd like to think we can continue to do that. And I think we can, whatever revenue we grow with will be quite profitable. And that's our basis for increasing revenue. Otherwise, we won't do it. And hopefully all these new panels, well, the 2 new panels that we've been asked to join will be quite lucrative for us. And we're working hard to make sure that that is the case. We are going to try and pursue acquisitions. We have tried this over the last couple of years. It just hasn't been quite the right acquisitions, and probably the right decisions have been made, because some of the acquisitions that did take place have failed miserably. But we're always looking for new acquisitions. So hopefully some will present themselves to us. That's basically it. Thanks for listening. If you have any questions, please ask. And there's the email address if you want to shoot some questions across later.
Thank you. Yes, we did. We got a few after coming in here. I might take the first one. What is HiTech's market share? I think maybe that's maybe just give it a bit more context. When you say you're, top three, top five on on those panels, like does that translate into, you're like kind of 10% of all jobs that, need to be filled? Maybe just give us maybe a little bit more context there.
We're probably less than 3% of the market. When we get ranked on the number of awarded contracts per month. So on average, we're getting awarded, fairly high number of contracts under that panel, but our market share is relatively small.
Okay. And then we have another one here. Any thoughts on expanding internationally, over to New Zealand or I don't know, into another maybe given your work with the government, it'd have to be a kind of a friendly Five Eyes nation, maybe.
Yeah, no, absolutely. Look, we're open to all of that, and that's probably best done via acquisition. So that's the way we've looked at it, and we haven't limited our geographical search for the right company to join the HiTech Group. And we're also open to joint ventures and the like. So just to leverage off our existing brand and position.
And in terms of fixed I shouldn't say fixed maybe, but perm placements into some of these roles versus the contract side of the business. I know it waxes and wanes from one year to another, and what government is thinking, no, we want our own people in here, no, now we want to like outsource everything and have it on demand. But where kind of currently, in terms of that revenue that you're seeing, is it 80/20 one way or the other?
About 95% is recurring contracting work.
Okay.
Yeah, very little of it is going to be permanent. Going forward, we have this opportunity to ramp that up. So I'm happy to swing it to about 10% of our revenue if we can. So we're on the right panels to do that. It's just that the space that we work in and the kind of people that we generally deploy are fairly strong technically, and they command much higher rates than any permanent salary could offer. So they tend to be more attracted to statements of work, contracting type of engagements. And again, what we want to do is we want to make sure that our bottom line is strong. So it depends where the effort's going to go relative to the bottom line. And one of the, as you rightly said, the permanent placement side can fluctuate heavily one month to the other. So we can never be reliant on that. It's just a nice to have. And if it's 10%, then we're comfortable to go that path. But at the moment, it's nowhere near that.
And in terms of kind of market dynamics, post-COVID, COVID kind of thrown everything into flux, and we've had a kind of more of a negative flux in the 2 years after it. If we say 20 to 22 was one scenario, and the last 2 years have kind of been another scenario for most businesses across most industries. It's kind of swung different ways depending on what the implications for COVID restrictions were. What is that kind of meant in HiTech's world in terms of new competitors, irrational pricing or irrational pricing, ability to get staff. Obviously, we see a lot of immigration coming into Australia. I'm sure some of those are highly skilled people who are coming from overseas, which are a benefit to the teams that you can pull together. So maybe just where are we in terms of COVID hangovers in terms of the space that you operate in?
We were largely unaffected by that. And two factors. One is that we didn't have a reliance on private clients. Now, while those years of boom during the COVID period existed, it was largely to do with permanent salaries, where technologists were required and organizations were fighting for them. So there was a huge premium attached to trying to attract a candidate, 30-40% premiums year on year. We weren't really affected by that. In fact, what was happening with us is that we were supplying a lot of our contractor base into government still. We didn't get into the private space. So we didn't get there. Now, when the pendulum swung was when the new government came into power in Australia, and they wanted to cut spending on what they termed at the time was consultants. And they sort of did a broad brush approach, and they cut contractors as well. So that's how our revenue dropped. But what happened was that whilst that was happening, a lot of these organizations that lost these contractors actually found that these same people were moving to other organizations. So they were sort of getting shuffled in other areas. So money was being moved from one large organization to another government department, and some of these people went there. And then the displaced workforce finally got placed in different areas. Rates never really adjusted. They never went up or down. In fact, what's happening now is rates are going back up for these people, their pay rates. So in this space that we work in, all of those people, all of those positions or those contracts that were terminated 18 months ago or thereabouts have all now been filled. In fact, the same organizations that reduced that contractor workforce have ramped back up past the number that they originally had when they started the cuts. That's come back into a cycle. So now what you're going to have is this feedback, which is going to say, well, I need more money. And so rates are going to kick back up. And that's where we're hoping some of our margins will continue to be sustained. But it is what it is. And, you can't change the way that some of these, some of the forces in government. But that's why in our space, some of these high-end technologists, they really don't get affected. Their rates are going to sit where they are, and they're going to continue to increase because they're quite good at what they do. And if we're working in the defense space, for example, you only bring on the very, very best. And that's because we are behind on technology there. So we're playing a bit of a catch-up game. You're not going to bring on people that don't have the expertise. They've got to bring something to the party. So if they're going to bring something, it's going to have a premium attached. And that's the space that we play in. We don't really get affected by the whole permanent fluctuation of salaries, whether they've dropped and whether corporates have cut their spending on that. And that's one of the advantages, of course, of doing what we do, which is what I often say is working with the best clients in town, and that's government.
And in terms of getting on these various panels, how much of a barrier of entry is that for somebody who might want to come and enter the market, or somebody who hasn't traditionally played in the federal government space? They've more worked on the kind of big enterprise corporate side, but recognize there's a lot of work currently coming to the table, and now they want to kind of be part of that. Is it hard to get there? Does it take time, and you kind of have to kind of work your way up through various security levels, or is it a case of there's an administrative process, it takes a bit of time, but it's not it's not the hardest nut in the world to crack?
I think the mandate in recent years from government is that they want to open it up more,
Okay.
so that they allow more of the smaller organizations to come in. The reality is it's a very stringent hurdle. There are many hurdles you have to jump, and the tendering process is quite extensive. The key factor here is what experience, what knowledge, what expertise do you have that you can show you'd be useful for. And I don't think it's easy. Whilst it's opened up, there's a lot of work involved. For example, the ICTPA, you have to be an accredited DISP member at some point to do work on that panel. You may get on the panel, but if you're not a DISP member, you will not get any work. And then you have to go through the DISP membership process, which is quite extensive. You have to be cleared at certain security levels for security officers. You go through an extensive process of accreditation, and it's quite costly to do that. So that in itself is a preventative measure to prevent anybody just coming into the market. Now, you may think that just because you're a large organization or you've done some work with large private corporates, you're going to jump in there. No, there are other hurdles you've got to cross. And I'm not going to go into details, but this is a lucrative panel to be on if you can get on it. But to get on it is not that straightforward. And rightly not, because this is a sovereign panel that allows organizations to provide services of critical importance, of national security to Australia, primarily to defence. You need to have the right organisations there. And when the government talks about now promoting SME involvement, well, it's got to be Australian sovereign SMEs. And that's what we're pushing for here. And I think they're fully aware of that. So it's not straightforward. The people panel is a whole of government one. Again, not straightforward, quite selective. ICTPA, yes, what we found in the recent round is that they reduced the number by 1,000 suppliers, over 1,000. So something has happened there. Now, when you've got these public panels and people are on it, one of the things you can easily do is measure performance. And I think that's the way that they're doing it. And just because you're on the panel doesn't mean you get selected for work. It's just a starting point. Then the hard work begins. Who are you? How is any section of defence going to know you? Well, good luck if you're just coming to the market. And that's where I think the differentiator is having that brand and established capability that is well known in the market.
Yeah, and then final question from the audience here. I'm not sure if this is in reference to your own staff or because I think you have touched on the staff that you're providing into all these various government departments, but what percentage of consultants are temporary versus perm? So I don't know if they mean in terms of your business, what percentage of people are working on temp roles versus perm roles?
No, we don't release those numbers, but I can tell you most of our people are they're contractors.
Okay. Perfect. All right. What time are we now? We're just gone over the hour, so let's leave it there. Elias, thanks very much for coming back in and joining us. It's been a long overdue. March 22, I went back and checked since we were last here with, so 2.5 years. Hopefully it won't be so long between drinks again. And
I hope so.
we'll hopefully catch up at some point in 2025.
All right, Mark. Thanks very much. Take care. Thanks, everyone.
Thanks, everyone. And that wraps up our session for this morning. We'll have our final session of the year. I'll just quickly mention it next Tuesday morning, 9 to 10:30. The email invite, I think, went out either late yesterday or this morning. And I look forward to seeing you all then. And I wish everybody a good rest of their Thursday. Thank you.